Hi everyone, hope you're all doing well. Today we're going to talk about Hims and Hers stock and can the stock carry on smashing it, because at the moment that stock has been on fire. Currently I am up over 600% on my Hims and Hers position. So we'll talk about today, is there still potentially more upside from where we're at right now? And as well as that, we'll do a bit of a news catch up as well, because that has actually been some news with Hims and Hers. Obviously, we've got earnings very soon, but also there's been a few more developments like the Super Bowl adverts, and we'll also talk about that one as well today. Hope you enjoyed the video. Hit the like button, especially if you're a Hims and Hers shareholder. Let's get started. So Hims and Hers stock has been on absolute fire at the moment. I'm currently up around 600% on my Hims and Hers position, which is absolutely bonkers to say. Yesterday, fantastic day. The stock was up another 6%. In pre-market, the stock is up nearly over 3%. Obviously, by the time you guys see this video when it's edited, you'll know exactly what is going on with the stock. But there's some serious momentum going on with this stock at the moment. A lot of buyers in, maybe a little bit of pressure on those shorts at the moment. But year to date, this stock is currently up 83%. So yeah, what a performer it has been so far this year. But not only just this year, the last couple of years since the days when this stock was uninvestable at $3, the stock has been on fire since those days, up nearly 1,000%. So well done if any of you guys are hanging on to a $3 average. Obviously, I think I'm somewhere around the $6 range at the moment. But yeah, the days when we were covering this stock, 3 years ago, I mean, I just look at myself there. I look so much younger there. Those days when I was covering this stock when it was a $4 stock, $3 stock 3 years ago, and making these videos like this and making these videos, going through the earnings, breaking all the earnings down and going, look guys, this is absolutely unbelievable here. And obviously we kind of getting the rewards there. It is great to be really the first financial stock market content YouTuber to kind of be talking about this stock. Obviously the great thing now is that a lot of people have cottoned on to the stock, so there's a lot more coverage on YouTube now, which is great. It does mean my videos are now pushed down a little bit now, because some of the bigger boys, the bigger YouTubers are out there covering it at the moment. But I get to at least say I was the one to kind of, the first long-term investor to bring it onto the YouTube scene. I don't mean anyone that was kind of covering it when it was a SPAC stock and they were just buying anything that had SPAC in the name, or that back in 2021 when they just stared at the revenue growth and went, oh look, it's growing really fast, but at the same time it was losing more money than the market cap. Obviously I think I was the first YouTuber on the stock market scene to a true long-term investor to bring it onto the scene and talk about it from a long-term position. And hopefully some of you guys have got the rewards like I've kind of got the rewards. But let's do a little bit of a updated news with Hims and Hers, and then we're going to talk about, does it still have the potential to do very well going forward? So the kind of only biggest news story out at the moment is the controversy around the Super Bowl ad. I don't know if you watched the Super Bowl, and even if you did, you wouldn't have got the advert in the UK, but if you're in the US side of it, you would have seen that there was a ad about Hims and Hers. I'm sure they did one last year, but they did one this year as well. Went for a little bit more of a controversial tactic. So what they basically did is they went in the advert and they basically called all the big pharma a bunch of cronies that are ripping people off, and they're charging way too much and profiting from them. And Hims and Hers is the new pharma stock that's actually offering convenient, affordable telehealth care, which is what we know they do. That's why I bought this stock. And it was a bit controversial because basically all of these big pharma have now come out and they've said, oh, that Hims and Hers, they're saying that they're cheap, but the products aren't safe. And they had to do some sort of thing to kind of come back at Hims and Hers. They cannot have an advert basically slating them off, calling them profiteering from people with health problems, and then go, oh yeah, that's actually correct. Even though that's true, they couldn't just sit there and take it. So they've had to come out and say like, oh, these Hims and Hers products aren't safe. But realistically, we know they are, and that's the way they've kind of got back at them. And people have kind of starting to come a little bit aware to Hims. The awareness of Hims and Hers is starting to kick on now, where people actually go, oh wow, look at how much cheaper they are than a lot of these other traditional healthcare kind of products that we have out here. And people are realizing that, and what we're seeing at the moment is after that was put out, we see the surge in Hims and Hers health products. After that advert, it was successful, and the Hers platform actually got into second in the chart. Hims actually got to fourth in the chart as well. So the Super Bowl ad, even though it caused some controversy with some of these big pharma companies coming out and slating them, it was successful as people were more aware that Hims and Hers is a cheaper alternative. So they are getting the rewards, and hopefully that translates into more customers. So well done to Hims and Hers. And we once again saw a big uptick in the searches on Hims and Hers on Google, which is another good sign. And hopefully that just keeps improving this traction where we are starting to see that revenue growth and that profit growth really start kicking in. And balance sheet wise as well, such a strong balance sheet now where, there's no debt on there. The cash balance is starting to build up. They can continue to throw that into share buybacks going forward. And you just look at how fast this business is moving, to a 10 billion market cap now. Realistically, you look here and, this company was only founded in November 2017 and we're already at a 10 billion market cap, and all the big pharma companies are shaking in the boots where they're having to put, these headlines out to try and stop Hims and Hers taking all this market share up from them. I can see why, you should be excited. You look at this management team here, what they've executed on. Look at Andrew Dunham, founder, who still owns over 8.5% of the business. It's so exciting where Hims and Hers potentially can go in the next few years. And when we look at the opportunity for Hims and Hers, it still remains very much untapped. There's only a few markets that they're currently in. They're only in, the kind of like 4 markets across here, which have, big market TAMs, but there's still, there's such a young company where there's so many TAMs for them to still move into. And we're not even talking about, the potential of like international expansion going forward as well. So yeah, it's exciting times because, they're scratching the surface, but you look at the markets they can go in, there's so big opportunities. And the thing is when they go into these markets, they're not only like, taking some customers, they're taking big market share in these sort of businesses when they're going in. You look at how they've been able to do very well in the mental health category, how they've done very well in the weight loss category. It's very good when these guys come into, they're executing to perfection, and that's clear in the financials. This is why the stock's absolutely booming, because you look at the financials, the EPS is going from 0.05 up to 0.21. You're having a 4x in the EPS. You've got a company growing at 90% revenue growth going forward. In the upcoming quarter, that's insane growth. So when that happens, you are going to have a stock that performs well. You are going to have a stock that trades at a bit of a premium, which obviously Hims and Hers is doing at the moment. Now, obviously the stock has skyrocketed. The stock is at 107 times earnings, which is certainly a rich valuation. The negatives that I would see with Hims and Hers right now is that, in my opinion, analysts are starting to catch up to the business. So previously, when I've been a Hims and Hers shareholder in the likes of 2022, 2023, 2024, previously, analysts have actually been quite slow to update the numbers. So, for example, right now, already in 2025, 42% revenue growth is forecast, which is insane growth. But normally at the start of the year, we're kind of like down in the, like the 20% range, maybe the low 30s. I'd say more the 20% range. So analysts are normally really on the floor with the numbers on Hims and Hers. But realistically now, the analysts are getting a lot closer to the numbers they're doing. So already at the start of 2025, we're at 42% revenue growth, which is obviously quite high to meet. Obviously, last year we were expecting 67% growth. So there still could potentially hike up the number. I just think there's potentially less hikes to kind of come up from Hims and Hers. And that's something just to be aware of, that it has been a little bit different from the last few years, is that analysts have always been playing catch up on Hims and Hers, and now they're starting to get close to the numbers that they are going to do. And obviously when you're at a premium valuation like Hims and Hers, you have to hit the numbers to have this valuation. If at any point they miss these numbers slightly, you are going to get punished as a stock. An example for that would be like what we're seeing here with Trade Desk today, wrong ticker symbol, TTD. Numbers were not miles off where they were expected, but the missed and the slowing. Any signs like that very quickly at a stock that's a premium, and like Trade Desk, for example, was 156 times earnings. That was a premium. As soon as you slightly miss, boom, whack in the face. And that's something that you got to be aware of with Hims and Hers. It is entering that territory where if it carries on doing these numbers, it will continue to fly, but just be aware that if there was ever that day where the numbers were to slightly miss, you could see that with Hims and Hers. You know, the days of it going up and up and up will not always go on forever. There will be a point where Hims and Hers have a dip, but that's just something to be aware of. Now, let's talk about some numbers, because I had a quick talk about, you know, potentially going forward there. So when we do look at some numbers here, I put 25, 30, 35% revenue growth in. I'm not sure what they're going to grow at in the long term. Obviously, they should slow down naturally as they continue to grow, but I've put some form of range in there, and that's still pretty good growth. Profit margin, I'm not 100% sure what their mature margins are going to be, so I put 5, 7 and 10% profit margin in, and that does assume some increase of the profit margins as they continue to scale. Now, I put 20 times earnings in because I don't like to assume 100 times earnings, because in my opinion that's getting a little bit frothy. I like to put 20 times earnings in. Obviously, if you're doing these numbers, I think you're going to be a little bit higher than 20 times earnings, so we'll change that in a second. But looking right now, if we just assume no crazy metric expansion, there's not as much upside really in the stock anymore. Now, the big thing is that if I think they're doing these numbers, I don't think you're going to trade at 20 times earnings. I think realistically, I don't really like to go too much more than 40 times earnings. So what we'll do is we'll just update it so we do put 40 times earnings in. And there's still plenty of upside here. Now, obviously, the days when we used to talk about Hims and Hers and we were back here and I was doing these numbers, I don't know if you guys remember. If you don't, you can go on previous videos. Well, maybe not these ones, maybe a bit more recent ones. I don't know if I can just scroll up for examples to give you guys some example here. I think maybe that one there, maybe I do the numbers, or maybe this one here. I do more of the kind of like latest numbers on that one, and when I was even doing them ones, there was still plenty of upside. Now, obviously, the thing is now is that even from when I was talking about the stock then, you can see here that on the thumbnail picture, it was $31. Obviously, even since then, the stock's gone up another 50% since that time frame. But when I was making them videos, there was still, you know, tremendous upside when I was running the numbers for you guys on these videos here. But now, obviously, it gone another 50% higher. The upside, in my opinion, is starting to get a little bit more limited. What I'll certainly say is the days where I was going, this could easily 5 bags still from here, they're probably gone a little bit now. I mean, obviously, if let's say it does something stupid and let's say revenue growth stays at like 50% and let's say they drag profit margins out to higher than 10%, let's say they get up to 15%, this stock could easily, and you know, metric expansion takes them up to 60 times earnings. If they do hit to like, I'm talking 10 out of 10 perfection, yes, this stock could still 5-10 bag from here, and I won't rule it out with the likes of Andrew Dunham there as the management team. I think it could happen, and I am holding the majority of my stake for that reason. Now, even without that reason there, I'm still holding it because if we do even hit these numbers, which I think are achievable, it's still worth me holding at the moment. So I'm still holding my Hims and Hers position because I still think there's upside here, even at this valuation. But I certainly think the days of this being an obvious 5 to 10x are maybe gone now. It could still happen if they hit to perfection, but it's not as obvious and as good value as what it once was. But I'm still holding my position in case I do hit those perfection numbers. So that's kind of where I'm at. Buying wise, I wouldn't like to be in a position of a buyer right now because it would be really tricky. Because previously I was like, you know what, you could still make good money buying now. Now, you know what, you could probably still make money, to be fair. But it's certainly, you know, people that are buying this might come in with the expectation that, oh, I'm going to buy it and what's going to happen is I'm going to have this. I don't think you'll have that. That's what I'd say about that one. And that would be something to kind of be a little bit careful of. But yeah, overall, my kind of thoughts with it overall is that I'm happy to continue holding Hims and Hers because it could still do very well. I probably will just take a bit of profit off the table every now and then, because obviously I want to lock in some of my 600% return that I have. And as well as that, on the back of my mind is that it would only take one earnings report where there was a little bit of maybe a slight miss in a number and the market would freak out and probably throw it under the bus. It's, example would be like the trade desk today, a little bit of a miss on the numbers, and or even if there was a little bit of the signs of a slow, let's say that analysts are expecting 67% growth this year, and then Hims and Hers, 42% growth this year, and let's say Hims and Hers say, actually, you know what, we're only going to grow, I don't know, something stupid like 38% growth this year. I would expect Wall Street and investors to throw this under the bus mega and go, oh, it's the end of the world, Hims is slowing down, it's only going to grow at 38% instead of 42%. Them days could, maybe come at one point. You never say never, and very quickly, if the stock was to fall 20-30% because of that and throw it under the bus because it's concerned about a 3% slowdown, which is crazy, but it happens, I've seen it before, then maybe you'd be like, oh, you know what, I wish I kind of took a little bit more profit off the table when it was at these sort of levels, So I'll just be a little bit of, locking in some of the rewards, but certainly I'm still holding for the long term because I still think there's a pretty good upside here really overall. So yeah, that's Hims and Hers for today, and I'm sure we'll probably be talking about it again very soon, because obviously the earnings are coming up as well. So I'll probably do an earnings review video for you guys on YouTube as well at some point when that is, whenever that does come around. Thanks for watching, guys. Hope you enjoyed it, and once again, congratulations to any of you guys that are Hims and Hers shareholders. Thanks for watching, guys. See you tomorrow.